Hey everybody, it is another edition of Everything Phoenix, our YouTube Live here edition, right? And we are discussing Everything Phoenix, right? So we have a great show today. We're going to jump in, but as always, if you could just go ahead and let us know, where are you listening from? Where are you listening from? And comment below if you have any questions. We'd love to have a conversation with you. Make this a two-way conversation because I guarantee that if you're thinking it, someone else probably is too, right? So jump on, ask us any questions. We have a great show today. We're going to talk about where are all the listings? Where they go? Where are the properties? And what does that mean for the future of our housing market, at least in the short term? We're going to dive into that. And of course, we have some interesting things that are happening in terms of development around the Phoenix area and some cool things about the luxury end of real estate, as well as a few things at the very end. I'm going to save to the very end to talk to you about one of my cool things that's happening here in the Phoenix area as well, especially for a football fan. So stay tuned for that. But also, too, we're going to jump in with some economic news and go from there because we need to figure out what the heck is going on, right? The Fed met yesterday, and we're going to jump in and discuss that as well. So let me know what you're thinking. Post a question, and we'll rock and roll, okay? Now, let's start with this right away and just jump right in. All right, so we know this is big news, right? This is big news. You didn't hop on this YouTube Live to just talk about this, and this is not all we're going to talk about. This is a little bit that we're going to talk about here. But we're going to start off with it because this is the big news, right? The Fed raises interest rates, and I heard someone on the phone actually earlier, overheard someone talking, and the person said, well, the Fed raises rates, so mortgage rates went up again. I'm going to wait. And it wasn't my conversation to be had, but I almost jumped in and took everything I had not to jump in and talk about the fact that, yes, that's true, but guess what happened to mortgage rates? They went down, right? They went down. So we're going to discuss that here in a second because, again, they're not directly tied to mortgage rates. Fed raises interest rates here. This is the news of the day, right? 0.5 point to highest level in 15 years. That's pretty high. Federal Reserve continuing its battle against inflation, raising its benchmark interest rate to the highest level in 15 years. Okay. It is now the overnight borrowing rate is now 4.5%. And then this is what banks lend to each other on and so on and so forth. Along with the increase came an indication that officials expect to keep rates higher through the next year with no reductions until 2024. Guys, I'm not sure if you're aware, but with the Fed and how the markets move, this 50 basis points is already baked in, right? And that's the big reason why you didn't see mortgage rates spike as well as along with the federal funds rate with this increase. So let's talk about that for a second. What's almost more important is what Jerome Powell, the chairman of the Federal Reserve, says after the announcement of the increase of interest rates. And that's the part I've highlighted right here. He has this highlighted that he expects to keep rates higher through next year with no reductions until 2024. He didn't say that. That's what official or experts think is going to happen. So we'll see, guys. I don't know if that's necessarily the case personally of what's going to happen. I think right now there's a lot of talking heads and experts out there saying that the Fed's going to overshoot this, and there's probably a good chance that you're going to see no increase in February when they meet again, potentially a small increase, but probably most likely no increase. But who knows, right? So we're going to get down here. This is Jerome Powell talking, obviously, after the raise of the rates, and you can see right here the federal funds target rate since July of 2006. Right? Look at the swings here. So we're at darn near zero for this whole time. And we all should have been buying real estate and taking leverage on the real estate, right? We should have been doing the opposite of what Dave Ramsey would say and getting mortgages at 2.75% and buying real estate. Commercial, residential, just buying real estate and holding, right? Because you don't wait to buy real estate. You buy real estate and wait. So there you go. That's the graph right there. It's kind of all over the place, right, to an extent. And then this just goes on to talk about the worst inflation that we've seen for a while. And guys, that's the biggest thing right now. The biggest thing right now that the reason why mortgage rates did not did not go up and they actually curtailed is because the CPI came out, as you know, a couple of days ago, and it was better than expected, hinting that inflation might be getting a little bit more under control, right? That's a good thing. I don't think we're seeing that yet at the grocery stores and things of that nature. But gas, hey, gas is down a little bit. So that's good. Not that it's all inflation driven, but you get the point. So there we have that. Now, let's jump over here like we talked about and let's talk about rates. Okay, here's where they are as of today. This is, I think, refreshed maybe an hour ago or something like that, right? So 30-year fixed right here. Oh, I just clicked on it. Let me go back, guys. 30-year fixed. I think this is a better indication of it right here. Okay, let me share the screen for you. All right, 30-year fixed rate. There you go, 6.13%, guys. It's down 0.14 now as of yesterday. That's what that arrow builds off of, right? They're down. So rates went up a half point on the federal funds rate, but mortgage rates went down 0.14%. And you can see over here, this is what's interesting to me. Okay, you can see right here. Look at the 30-year jumbo, 5.5. So if you're above the conforming loan limit, which I believe in Maricopa County is like $726,000 now, if you're above that loan limit, buying $1 million house plus or whatever, you can get a rate at 5.5%. Now, being the fact that we were in the sevens and whatnot just 2-3 months ago, holy cow, right? Now, if you look at the 30-year FHA loan, 5.68%. You say, look, Kelly, that's fine, but I'm not going to buy $1 million house. I don't have that kind of money. Cool. FHA, which loan limit is less than the conforming loan limit, right? And it has a little bit less stringent guidelines when you are going to qualify into your mortgage application. 5.68%. So that's down too. That's awesome. Okay. In my opinion, that's awesome. So now if you go over here and you read kind of the synopsis of this, but again, what they're saying is that even though the announcement went up, this is already baked into the market. And that's why you're seeing mortgage rates not follow that trend. Okay. So this is actually a really good website, Mortgage News Daily. If you have a chance to look at it, this is what's going to put out the best information on mortgage rates, in my opinion, on a daily basis. So you can check this out. I check it out all the time. But it's basically saying that now we knew the dots, right? In a word, dots. Simply avoiding any major upward pressure in rates is a victory today. But why? If the Fed rate hike wasn't the threat, then what was there to be concerned about? And in a word, dots. What are dots? No, not the perennial bottom barrel choice of trick-or-treaters, but rather the dot plot that the Fed uses to convey its summary of interest rates forecasts from each member. It's interesting. On days like today, when the Fed has very little to say in a new policy announcement, the market prefers to focus on the dots for guidance. So I don't want to speak out of turn for some of my financial advisor friends, but I believe they would say they can actually now they're actually now focus on the fundamentals as opposed to just what someone's going to speak out of their mouth in terms of raising rates or not or whatever, right? And that moves the market. So in a way, this is good, right? This is good. Some normalcy that we haven't seen for quite some time, right? Okay, now we're going to jump over, guys, to where the heck are all the properties? Okay, that's what you came here for. That was the title. Let's just dive in. Now, before I dive in, I want to put this on the screen here because remember, the Cromford report, this is what we like to use, okay? Cromford report, again, at a balanced market through their CMI, their Cromford Market Index, what they call it, is a balanced market 90 to 110. 90 to 110. If you're below 90, you're talking a buyer's market. If you're above 110, you're talking a seller's market. So obviously, we've all been in the seller's market for many, many months prior to this, right? So just keep that in mind as we go through the Cromford report. Cromford report is awesome. Let's take a peek. December 13th, okay, just a few days ago, came out. It has risen from the high 80s to over 90 as of today on the CMI, the Cromford Market Index, right? To over 90. Now remember, over 90 is a balanced market. Okay, so we are now declaring a balanced market again. The buyer's market is a relatively rare thing over the long term, and our stay in the buyer's market territory lasted less than a month. Kelly, wait, hold on. Kelly, you're telling me that we're not in a buyer's market right now? In some cities, yes, we are. Absolutely, we are. And we're going to cover that here in a second. But overall, the data, and this is raw, pure data, okay, it is no longer a buyer's market. We're just a little bit over 90, and 90 to 110 is balanced. So it was the true buyer's market for Phoenix in general, okay, from November 15th to December 12th. Didn't even last 1 month. Does that mean your window of opportunity is gone if you want to buy? No, of course not, right? Of course not. But there's deals to be had a lot of places right now, right? But that's interesting that the market is trending somewhat the other way. The demand index is still dropping, meaning there's less buyers, okay? It reached 70.9 today is lowest level since April of 2008, guys. What happened the summer of 2008-ish? The big boys went down, right? Lehman Brothers, Bear Stearns, AIG, all filed bankruptcy on Wall Street, and the whole thing imploded. Okay, so that's the lowest level since then in terms of buyer demand. The Federal Reserve is doing a lot of that, but guys, I think a lot of it is lack of education, lack of knowing the data, just hearing a talking head, not like me. I am a talking head, I guess, but I'm going off data. I'm not just giving my opinion here, right? But if you think I'm talking head and I need to have better data, let me know. How can I improve, right? Comment below. I'll talk to you about that, right? We'll have a conversation. However, the supply index is falling even faster. Where are all the listings? It stands at 78.7 and peaked a month ago at 82.8. The gap between supply and demand is closing, and we expect to head closer to the balanced CMI of 100 over the next 3 weeks. So as we go to the end of the year, which can be many times, sometimes the slowest part of the year, we are actually going to increase. Not because all these buyers are coming out of the woodworks and buying homes necessarily. It's because the lack of supply is incredibly low right now. Look at this graph. Here we go. New listings day by day, month to date. Okay. 1,099. Now, this is an interesting statement. Look at this down here, guys. Like 2022, okay, we had a very hot market turn cold in 2005. In the first week of December of 2005, we had a total of 2,730 new listings added to MLS through realtors and brokers. Yet in 2022, this December, we have seen just 1,099, down significantly. And you can see right here, right? And here, where's 2005? 2005. Yep. So 2,730 right here. And then 1,099. I mean, much lower than many, many other places. Why? People are waiting to see. It's not just about the rates, guys. People have a lot of equity right now. Now, the equity is decreasing, right, across the board for the most part. Or I should say decelerating, right? That's the official word. But again, there's hardly any properties to choose from, relatively speaking. So very interesting. All right. So now let's go over here. I thought this is interesting. Okay. Check this graph out, guys. I think you're going to really like this one. This is probably my favorite one of this whole presentation. That doesn't mean you leave after this, right? Stay on the live. We have some good stuff at the end. All right. But this is a pretty good graph. All right. December 14th, just yesterday. Oops. Sorry about that, guys. Sale prices have declined significantly over the past 6 months, and price levels right now are roughly similar to December last year. Okay. Prices climbed for the first half of the year through the first quarter, although the first quarter was more positive than the second. For those who want the most negative picture, here we go. It'd be best to compare prices now with those 6 months ago. So some people just want to hear the negative news, right? They love the negative clickbait. This is for you as well. Here are the monthly median sales prices for December 13th compared to June 13th, and also with December 13th of 2021. Okay? Check this out. You can go by city. Let's just take Scottsdale. Here we go. The median price, December 2021. Remember, 2021 was a phenomenal year, man. I mean, a lot of appreciation. Really, really good year. So prices are already up at this point. $875 is the price in Scottsdale, okay? It went as high in June of 2022 to $1.1 million. Now, currently, December 2022, $1.022 million. So the 6-month change in Scottsdale has been a negative 7%. Overall, however, the change from 12 months ago is 16.9% in Scottsdale. Pretty healthy. So if you bought a home, my goodness, you bought a home before December 2021 in Scottsdale, holy moly, you're doing really, really well. Okay, good job for you. Good work. But you're still up overall, right? If you bought it, even if you bought it after, December 21. But if you bought June of 2022, you now have some negative equity, unless, of course, you put a large down payment down. But you are negative on appreciation, 7%. Let's look at Gold Canyon. Check this out, guys. Holy cow. Gold Canyon, guys, is a more of a retirement-style community. It's very small. I think about 13,000 people or so on the very far east valley, east of Mesa. Okay. 2 great golf courses. Not a lot of amenities, but, beautiful mountain views, and it's just a really nice place. And look at here. 12-month change, 19.5%. 6-month change when the market is decelerating, Gold Canyon is going in the opposite direction, plus 8%. Woo! If you bought in Gold Canyon, thumbs up. All right, let's go to let's do Phoenix, right? Phoenix is the biggest city here, down here. Look at this. Interesting, guys. Phoenix is negative. Okay. So if you bought a house in December 2021, all the appreciation you gained, gone minus 4.5%, in addition to everything you lost since then. Now, if you bought obviously January 21, you should probably, I'm fairly certain you're still good. You still have appreciation equity from that purchase. But look at this, guys. And if anybody, by the way, wants this graph sent to them, I'd be happy to do so. Put your email in the comments. I'll send it to you. Okay. So you can look at this at a later date. Buckeye, minus 0.9. Which ones are getting hammered the most? Let's go to the very bottom. Lynchville Park. Oh my goodness. Okay. Lynchville Park is, as you guys know, is a nice suburb on the West Valley. They do have a huge military presence, right? Because of Luke Air Force Base, right? And so you have some military families that live there, rent there, etc. But right now, 530 last December, peaked at 564. Oh my goodness. Litchfield Park is down to 444, 990. Okay. That's not good. Florence on the outskirts of the Southeast Valley, south of Queen Creek, Santan Valley. Sun Lakes, minus 7.4. Sun Lakes is a retirement community, which is interesting, right? Retirement community got hit that hard. That's interesting, right? Arizona City, Sun City, retirement community. Again, another one got hit hard. Phoenix, Fountain Hills. Fountain Hills, interesting, right? Very interesting from a median price standpoint. Minus 3.9. Obviously, you can see the biggest changes. Scottsdale was one of the better ones. Okay. How about Chandler? Chandler's a popular suburb. Plus 0.4 in 12 months. Over 6 months, down 13.6. Okay. So the biggest hit on the 6 month is Litchfield Park, as well as overall in 12 months. But Phoenix 15.4, 15.2, excuse me. So this is interesting, guys. This is why you have to know the data, okay, to make an informed decision. So if you were looking to buy, might this data help you to determine where you want to live? If you are open to Glendale or Peoria or Scottsdale or Fountain Hills, right? I think it would. And having an agent that knows this data really helpful to help you make the best decision and make the best financial decision, right? Okay, let's jump over here because this is interesting too. Further documentation and support, guys, as to what the heck's going on here. Okay. Percent of closings with seller paid concessions to buyer noted. What are concessions, guys? Concessions are seller credits, if you will, right? A credit the seller gives to the buyer to help them pay for maybe a lot of different things. Maybe their closing costs, maybe a rate buy down on their interest rate for the loan, maybe prepaid HOA dues for an entire year. Could be a lot of things, guys, right? But when the sellers are paying concessions, that's an indication that the buyers have a lot of leverage, right? And that it's going to a buyer's market, and that it probably is a buyer's market to an extent. Well, look what's starting to happen now, starting to curtail, okay? So it peaked right here, which is November 20th of 2022, okay? It peaked. You can see the box right here where 391 closings with seller paid concessions out of a total of 761 for a percentage of 51% of all closings had some sort of concession the seller is given to the buyer. Please, Mr. Buyer. Please, Mrs. Buyer. Buy my house. I'll give you some money in addition to giving you a good price, right? So again, this is why I don't understand why a lot of people that were on the fence making multiple offers on properties left and right back in April and March and May that now still haven't purchased. I know quite a few of them, and they're sitting there going, I'm going to wait. Okay, fine. But you wanted the house bad, and that same house you were willing to pay, $740 for is now worth $640, and yet you're still waiting. There could be other reasons, but it's at some point you got to jump in and navigate the waters with potential refinances in the future or not, or whatever it may be, the right city, right suburb to buy a house in. But look here we go. December 11th, okay, 47%. You had 48%. You had 50%. So it went from 51 to 50 to 48 to 47%, right, guys? It's curtailing, okay? Now, could that be an indication that some of the leverage is starting to shift a little bit right now? Yes, it could. It absolutely could. Okay, so interesting to pay attention to. We watch this and track this like crazy, right? Because it matters. All right, I know a lot of you guys like this this graph. We're going to start here. This is December 1st. It's December 15th. It's moved a little bit since then, right? But here we go. Fountain Hills was amazing. A lot of red on the board, right? Meaning that, according to the Cromford Market Index, CMI, a lot of these suburbs were still going down, 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 down. Well, fast forward 1 week to December 8th. Okay. This next one's going to come out. It's not out quite yet. It's going to be out in a day or two. But check this out. Look at all the additional green on the board now, right? So a lot of these cities now are starting to move in the right direction. Are they still in a heavy buyer's market? Absolutely. Again, anything below 90 is a buyer's market, right? That means all of these are in a buyer's market except for 4 as of about a week ago. Now that's changed even since then, right? We know now that some of these are actually, like Phoenix is now a little bit over 80. So Phoenix is going in with a green arrow right now if this were to come out today. So keep that in mind, guys. But the point is, you see where the trend is going, okay? So, some sellers may be very educated to this, and therefore maybe they won't give as much on the sale of the property. Who knows, right? But nonetheless, it's going in the right direction. And then, of course, we have our lovely gauges, which everyone loves a good gauge. It's like watching your gas tank or whatever, right? So Phoenix, there you go. Phoenix, as of December 8th, because that's the most recent one I have for the gauges, right? Not everything in Cromford is every dashboard is updated on the same day. It's 88.7, but we know it's a little bit over 90 now, according to the commentary we just read from yesterday. Okay. But look at demand. Look at supply. It's interesting, right, guys? We haven't seen something like this for a while. Let's go to Scottsdale. Okay. 56 on the supply side, 64 on the demand side, 114 overall. Let's check out Glendale in the Northwest Valley, 87. Okay. Getting close to a balanced market, right? And I don't know, Buckeye's Buckeye's still down at 47.5. Wowzers. Okay. If you guys want to see any of your areas, let me know. Throw in a comment below. Okay. Gilbert, 81.7. Paradise Valley, highest price points in the valley. You are at a 105. Balanced market. A little more towards the sell side, but balanced market. Look at supply and demand, 50s and 50s. It's crazy. Queen Creek, Southeast Valley, 49. Guys, the deals to be had are Queen Creek, Buckeye, and those places on the outskirts of the valley, right? It's let's go Tempe. Been Tempe for a while. 80.7. Okay, about where you expected the property to be because of the great central location of Tempe. All right. Okay, let's jump over here. Here's how major U.S. hotel markets are faring post-pandemic. This is interesting to me, okay? Now we're going to jump into some business stuff about the Phoenix area because this kind of dictates as to, what's happening around the job front on the commercial real estate side and so on and so forth, okay? What this is saying overall is that right now the average daily rate per revenue, right, available have surpassed pre-pandemic levels, okay? Amongst the 25 largest U.S. hotels nationally, okay? But there's still a lot of metro areas like San Francisco, Oahu in Hawaii, Seattle, okay, where they are lower than their 2019 levels of bookings for hotels, okay? I think a lot of that might mean because people are choosing to go elsewhere. I don't know, right? I'm assuming that's the case. And so it's just an interesting article. I read the whole thing here. I don't want to bore you guys with it because it's not all fun, but basically they're talking about, how hotels and rates, how the travel is working. Because guys, STRs, short-term rentals, are down a little bit as well from 20 and 21, but they were so high that you'd expect that, right? Going back to 2019 levels, very similar to the hotel market, okay? So I thought that was interesting. A couple more here, guys. Phoenix among top cities for tech job growth report shows. That's kind of a no-brainer, right? You got TSMC, you have, which is the big one, right? And then, of course, you have Intel. That is technically the big one, but TMSC is the new, the pretty girl just moved in town, right? That's what TSMC is, right? From Taiwan. Phoenix metro area saw a 31.7% increase in job posting growth through October compared to the same time period last year. Okay. That's amazing. 31.7 job increase, guys. And you know what? I was going to save this for next week, but I'm just going to jump into it right now because this is interesting. Okay. Check this out. Did you guys know, before I put it up on the screen, you guys know that Arizona is going to have a flat tax when it comes to state sales tax coming up? Do you guys know that? Hold on. That thought. Abby has something to say. Abby, what's going on? It's crazy to me that you can get a home in Buckeye for the same price as a condo in Scottsdale. Location, right? There you go. But it's kind of crazy. I would wholeheartedly agree. So if you want the house, the yard and all that, go to Buckeye. It's the same price, right? And then if you're cool with that, then you're going to be good. Now, let's jump over here, guys. State sales tax. Okay. Do you guys know that Arizona is now going to have a flat sales state tax starting in 1 month, 2023, less than a month? Okay. Check this out. I mean, I thought this was fascinating. This is a letter from Governor Ducey to the Department of Revenue Director, I assume. And he's talking about how the state's surplus of budget is incredibly high right now. And given some resolutions that were passed through the state legislature, once the state of Arizona, received a certain, I'm going to share this with you right now, guys, received a certain surplus, then the flat tax could be enacted. Okay. So here we go. The 2.5% flat tax was scheduled to phase in over 3 years. Okay. Due to Arizona's continued economic growth and record surplus, the flat tax has been unlocked ahead of schedule, indicated by a September 29th joint memo from the Legislative Budget Committee and the Governor's Office of Strategic Planning and Budgeting. And all that to say that the general fund of revenues, excluding the beginning balance of fiscal year in 2022, were $16.7 billion with a B, billion, exceeding the statutory threshold required to immediately implement the 2.5% flat tax in the coming tax year. Thanks to the unprecedented economic growth, we can deliver additional tax relief to Arizonans 1 year ahead of schedule. Today, consistent with the law passed last year, I am directing the Arizona Department of Revenue to enact Arizona's 2.5% flat tax for tax year 2023. In Arizona, we believe you deserve to keep the money you earn. This tax relief keeps Arizona competitive and preserves our reputation as a jobs magnet and generator of opportunity. Sincerely, Doug Ducey. That's awesome, guys. That is awesome. There are some states out there, obviously, that currently don't have a sales tax, right? For the state sales tax. Okay. Arizona obviously has a state sales tax. When they go to this next year, the Arizona flat tax of 2.5%, it will be the lowest tax rate in the entire country for all the states that have a state sales tax, which will continue to make Arizona, like you said, a magnet for businesses that we're already seeing happening. Okay. Businesses and high net worth individuals, heck, just the average Joe, right? To come to Arizona because they will save more money. Okay. So pretty darn cool. And there's an article right here that I'm going to break down in another YouTube video that describes the backdrop of the state's tax system and where it came from, the 2022 resolution that was passed, the 2020 resolution that was passed by the voters all the way through the state Senate legislature, and then to where it is today with this flat tax. So pretty cool. All right. A couple things more, but I want to hit that because of it talks about our major job growth, right, for tech. And the reason why is because it's very, very good and friendly corporate tax as well, state for businesses to come here and receive benefits, et cetera, to bring their employees and their manufacturing and their jobs and whatnot to the Arizona area. So obviously, Arizona is known as the Silicon Valley of the West, right? Okay, in the Southwest. And so there's no shortage there. You have big demand for software, data, jobs posting. So here's I want to show you guys. Here are the top 15 cities by overall job posting growth with the year-over-year job increases in parentheses. Houston, 45.6%. Okay, Orlando, Detroit, that was kind of interesting to me, right? But Detroit's up there. Good job. I don't know what Detroit's doing, what they're offering, but they must have changed something because that doesn't just happen overnight. They must have tax credits or something going on, right? Miami, Irvine, California. Phoenix, I'm at number 6 at 31.7%. San Diego, Indianapolis, Charlotte, Boston, LA, Chicago, Tampa, Seattle, and then, of course, New York. So that was kind of interesting. All right, guys, there's a couple more things here. Thanks for attending and sticking with us to the end. Okay. Year in review. I thought this was cool because at the end of the day, this is a lot about residential real estate. And here are the highest priced Phoenix area luxury home sales of 2022. Right here, guys. There you go. That's the highest one in 2022. Sold for $27.1 million in Silverleaf. Okay. I'm sorry. It sold for 28. I shorted them by $1 million. Wow. 28.1 million right here. And this house is quite the spectacle, right? It was listed for 29.5 and it sold for 28.1. And guess what, guys? All cash. All cash. So this is the reason why I wanted to bring this up, because I have a couple articles on the luxury side of here of things. But here's the deal: it's 21,000 square foot home, 8 bedrooms, 15 bathrooms, 2 separate guest houses, a 12-car climate control garage that features a drive-through out the other end, and 2 elevators. Okay, it's the second most expensive luxury home that sold this year, and the other one sold for 21 million. Right, this is number 2. Okay, so pretty cool. And I wanted to just go over that with you to share that it sold with cash, 28.1 million. Now, let me show this other article. By the way, here's Camel Dale. This is the second most expensive home that sold in Arizona for 2022. And this is a 15,000 square foot home on a 4.27 acre. I think I know that buyer who purchased this property, actually. And it is quite and you can go through this whole thing and see the whole slideshow, right? But it's pretty cool. Now, let me show you this other article because North Scottsdale Mansion sells for $11.2 million, a record for a country club at DC Ranch, guys. And there it is, a modern masterpiece on a larger lot in the country club behind the guard gates at DC Ranch, which we love DC Ranch, okay? But here's the point. In another signal that Bally's luxury home market isn't cooling by much, a North Scottsdale mansion sold on November 17th for 11.12. And I believe this article goes to say that they bought this one cash as well. Let me just double check that. I'm almost positive that's what I read earlier when I was going through this. Yeah. Other luxury agents agree that the Valley is still seeing plenty of cash buyers who aren't impacted by mortgage rates that have doubled since January. Okay. So that's the point of this, guys. So here's the point. Notice that article said luxury home market. Luxury, right? So they're not rate sensitive. They have a lot of money and they want to go someplace and have a second home or whatever, right? And guess what? Scottsdale is a great option. So right now, the supply is low overall. The supply for luxury, amazing homes is even lower. As you can see, people have no shortage of cash on the sidelines willing to pay to obviously get the house they want. And it's cash, right? We're talking 10 million, 12 million, 21 million, 28 million cash, right? It's incredible. Nick, what's going on? Made a comment here. What's the most expensive home that Cook & Associates has listed right now? Good question, Nick. Right now, we have one for $5.3 million on the market. Just came on the market. It is a new build. It is a contemporary home that is going to be transitional contemporary. It is on almost an acre lot in the Cactus Corridor, and it should be done somewhere around the end of February, 1st of March. But it is going to be a spectacular home. It has a kids' wing flex room with rooms off of it. It has a built-in casita that has not only a bedroom, of course, and kitchen and bathroom, but also has a small living room with the casita. The master in this house is, I've seen a lot of cool masters, guys. This rivals any of them. It is stunning and it's huge, right? The master closet has a panic room, which is awesome too, a little hidden room. But I can't tell you where it's at. That's a secret, right? You got to buy it if you want to know where that hidden room is at. And it's going to be ready, like I said, in a few months. So no HOA, and the pool is going to be one of a kind. It's a brand new pool, obviously, right, that they're digging. And the pool is going to be just phenomenal, like resort style pool. But it's going to have an island in the middle of it with an enormous ficus tree. We're talking like a $20,000 tree that's going to be planted right in the middle of the island, in the middle of the pool. So it's going to be outstanding, guys. Give me a call for any questions about that, or hit me up at social media here, or email info@cookandassociatesaz.com. Great question, Nick. Thank you. Okay, so there's a lot of cash out there on the sidelines, guys, and the market isn't really slowing down for that luxury home seller. So here's the deal. If someone says the market's slowing down, is that true? Yeah, overall, it is. It is true. No doubt about it. That's not a secret. But if you're looking to sell, now is still a great time if you have a luxury home to sell. There are still luxury home buyers out there, and they will continue to pour in between now and end of April with our seasonal market upcoming, right? So interesting. Last but not least, oh, by the way, I want to say one more thing. Let me jump around here back to this news here, right? About the Fed increasing interest rates and inflation. We have a lot of inflation, and inflation is what they're trying to tame. So I'm hoping that Congress doesn't continue to add more dollars to the economy, which I know they're talking about doing, another spending bill, because that is what the definition of inflation is, guys. The definition of inflation, if you're not aware, is too much money chasing too little goods and services. So if you just inject more money into the economy when you're already at a high inflation time, you're just going to, put diesel fuel on the fire. So hopefully we can curtail spending a little bit to help the Fed in their fight against inflation, to help the overall economy. Just my 2 cents. That's just a fiscal economic thing that I think is important to point out. All right, last but not least, if you like football, here you go. My good friend, I know well, Kenny Dillingham, is the new head football coach of ASU, and they just approved his new contract. There he is, 32 years old, the youngest head football coach in Division I right now, and ASU just hired him away as he was the previous offensive coordinator at Oregon. And I am just extremely excited and so proud of my friend Kenny, Coach Dillingham. And I hope that he is going to just take the ASU football program and turn it into the new direction, the right direction, and get them to be a winning football program and a powerhouse. So I hope that happens. Guys, look behind me. I'm a Nebraska fan through and through, but I live in Arizona, so I support the Sun Devils, right? So in Phoenix here. So I just can't wait to see what him and his staff can do with Arizona State football in the future. All right, that wraps it up. And thank you guys for joining as always. Really appreciate you. Feel free to always leave comments, always, and where you're calling from, where you're commenting from, where you're watching from. But also, too, if you're watching this on a replay, comment below. What do you think about what's going on with the listings? How's it going to affect the housing market? Where do you see the market 1 year from today in 2023? Where will it be, right? Where will the further appreciation that we received in 2021 be completely evaporated? Or will it kind of balance out and remain balanced out? And then we'll see, hopefully, this being somewhat the bottom. I love to see and hear your prediction. Here we go. Oh, Abby, so free tickets to all viewers. Sure, absolutely. Oh, T from AZ. What's up, T? Thanks for joining. Appreciate it. T Scottsdale. Hope I am not in the negative on my new home. Yeah, I mean, it's I hope so too. Now, that's a general rule of thumb. If you bought it right, which I know personally that you did, then you're probably just fine, right? But at the end of the day, guys, even if you are, right, what's your exit strategy? And if I know you, T, your plan will be to hold that property for quite some time, because when you do decide to move, you're probably going to keep it as a rental, because it's all about real estate investing and holding real estate for the long term. So I think you're fine. I know you're fine for the long term here, for sure. Okay. All right, guys, thank you very much as always. And comment below, let us know what you think. And as always, thank you for joining our YouTube Live. We're getting out of here right now in our new studio, by the way. Take care. See you guys.